Hi, I'm Eddie Sundergy and welcome to Your Finance TV's Crypto Revolution. We're covering all things crypto and digital assets. We're here again with Adam Blumberg, co-founder at Interaxis. Adam, welcome back.
Good to see you, Mehdi. Good to get together today, talk a little crypto.
And you know what? There's always a little crypto to talk about. And before we dive in, I just want to give our viewers a bit of a heads up on what we're going to cover this week. We're looking on the macro front at the State of Crypto report, which came from A16. I know you're going to say Z, but it's A16Z in my world. The price of Bitcoin and where to next. The fact that the likes of Fidelity and Bank of America are dipping their feet into Bitcoin indirectly via MicroStrategy. The impact of Shapella upgrade on the Ethereum network and a couple of bits in the regulation world. Well, actually, different one. The FedNow controversy, and a little wrap in adoption of Web3, where Hong Kong Finance Secretary and Japan's ruling Democratic Party are starting to push the focus on Web3. So, lots to talk about as always. And before we dive right in, don't forget to like and subscribe to Your Finance TV. Otherwise, you won't know what you're missing. So, Adam, should we kick off on the macro front?
Let's
Talk a
go,
little
Mehdi.
about the crypto report, the State of Crypto report from A16Z.
Zed, you know what? I'll go with Zed just for you because I,
I
I like Zed a
appreciate
little
that.
bit better. Yeah, so A16Z, of course, probably the biggest name in terms of crypto venture capitalists, but probably the biggest name in terms of tech venture capitalists. But they came out with their annual report, the State of Crypto Report 2023, which is really interesting. Honestly, Mehdi, it's a lot of things we kind of already knew, but of course, when they put their research team behind it and bring it all together, we all read it and go, oh yeah, that all makes sense, or I see what's happening. One thing that's interesting to pull out is they created something they call the State of Crypto Index. And this isn't an index like you and I think of a financial index where they're looking at certain prices of things or anything like that. This is giving us an idea of the state of crypto, what is happening in the crypto world right now. And if we go within here to their State of Crypto Index, and I know I'm hitting this first, they start looking at some of these metrics that just tell us about what's happening in that world, because Betty, there are a lot of people in the world, whether it's in the US or elsewhere in the world, that say, look, this thing isn't going to take hold. It's not going to make it. We don't believe in it, whatever that they want to say. This index that they put together takes all these different metrics. It can be things like active addresses, active wallet addresses or something that are actually trading. It could be number of crypto developers worldwide. It could be job search interest in crypto and Web3. It could be transactions, transaction fees, whatever it is. But they're looking at all these metrics over this time period of 2016 through now. And I think I think this index will continue to move forward so that we can look and see, are we trending in certain directions? Is this continuing its forward momentum? Where was the momentum strongest? Where was it weakest? And we can probably take some of these things and look back at like price charts if we wanted to and go, oh, when there was more developer interest, price was higher. Or when price was higher, there was more developer interest, whichever way you want to look at it. So it'll be interesting to look at this index from an entire crypto ecosystem perspective and see, the impact of what is happening in the ecosystem and where some of these metrics are coming out. Because a theme that you and I will continue to discuss in this episode today will be some of these new metrics that come out in crypto that we don't really see, in traditional finance or in traditional economics or something. But this is taking some of those economic style numbers and going, how are we looking overall at crypto? So that to me was a really interesting takeaway or something that A16Z has decided to create.
Well, it's funny you say this. So this kind of also we've got it in our macro portion of the show, but this could go in the adoption portion as well because it's kind of bridging that gap between the big picture and the adoption side. So it's always nice to see pricing tied to adoption and where we're going with this. And I know we don't generally talk about the price of where Bitcoin's going because we don't really care. We just care more about the adoption of it. But there was an interesting comment out from Willy Woo, who's been out there as a very vocal um, advocate of pricing Bitcoin, and he's saying that there looks like very little sell interest until we get to about 40,000, which I think will help a lot of people kind of feel a bit more confident and comfortable that this is, we're transitioning into a more adopted, more stable. I don't even know what I can call it anymore. Is it commodity? Is it currency? What am I going to security? Like, think
Well,
asset.
whatever you say, the SEC is going to take hold of, right? So let's go with commodity and stick with that for right now. Please don't call it a security.
Absolutely.
But this is where we talk about different metrics, yeah, in a moment I want to go back to the A16Z report, but with Willy Boo again talking about some of these different metrics that we see is something that some of these new metrics we can look at are things like we can look at long-term holders versus short-term holders, right? Because we can see, theoretically every wallet in Bitcoin. And we can see when they bought Bitcoin, when Bitcoin entered that wallet, what the price was at that point versus what the price is now. And so one of the metrics that Willy Woo is looking at is saying, okay, long-term, are long-term holders in the money, are short-term holders in the money. And based on this report, he's saying, look, short-term holders who have held on to Bitcoin for less than 155 days in the way he looks at it, they actually have a lower cost basis. So what does that tell us? The short-term holders, I think theoretically, are the ones who are more likely to sell, when the price flies up, or sell, when they panic on the way down or something. So what we see right now is the short-term holders actually have a lower cost basis. That means that they kind of bought the dip, right? So they've bought these recent price dips, and that, to Willy Woo, says, look, this is a positive thing. This says that the price came down, a whole bunch of those short-term holders got out. So if we look at the numbers back months ago, and even 6 months, 8 months ago, those people were the ones that were getting out. And now we see the short-term holders, all those people with new wallets, have started to get back in. The long-term holders, they still have a little bit higher cost basis now. The short-term holders' cost basis is lower. That in the past has been bullish. That in the past has usually signaled the price start to go up. That means maybe we hit kind of a bottom, right? So that's again, going to some of these new metrics that we have, because we have this extreme transparency, because we can see what's happening in all these wallets. We can see the movement of Bitcoin. We have new metrics. Now what we have to do is go, all right, is our theory correct? Just because it happened last time doesn't necessarily mean it'll happen again next time. But intuitively, it makes some sense.
And it's funny you said it about the long-term, short-term holders. We also, when things were extremely positive and everyone was all over Bitcoin, and the institutional adoption, and everyone was jumping on board, we'd see every other headline. There was Fidelity, the big banks, big asset managers, everyone was diving in to figure out how they could access Bitcoin. And they were talking whether it's Coinbase, excuse me, if they can go into 401ks. All of this conversation kind of died down over the last several months when we were in this crypto winter. As we're emerging, it feels like those conversations are starting to respark. We've seen the A16Z report on adoption and how it's increasing again, and we're feeling a bit more comfortable with these price moves as well. I know it's been going up, and we're up 50-60% since the beginning of the year, but I'm not looking at the fact that we're up 50-60%. I'm looking at the fact how that price climb has come, right? And it's been with consolidation at different levels. It hasn't just been this spike of 15,000 to 30,000. It's happened gradually with a pickup in volume, right? And that to me is a really solid indicator of I'm much more comfortable with where the price of Bitcoin is today. And what's interesting is, and this kind of moves me into my point of the institutions. We've seen some of these larger institutions not necessarily access the Bitcoin side directly. They've gone indirectly, and they've gone via MicroStrategy. We saw Fidelity, Bank of America, dipping their toe and increasing their stakes in MicroStrategy. And obviously, run us through MicroStrategy's platform and how they're looking at things. But this is another way of doing it, and it's all going in the right direction.
Yeah. MicroStrategy now is a de facto, Bitcoin ETF, right? They have 140,000 Bitcoin. which is a huge number. And with the recent move in Bitcoin price up over 30,000, they're actually in profit now. They're actually finally back into profit. I think their cost basis, their average cost basis is like 29,600. Don't quote me on that number, but it's somewhere around there now. They just made another buy recently, so they're actually back in profit. And maybe that's the impetus that Fidelity and I think he says Bank of America needed to get back in and buy some more. Because if you look at a chart of their buys, they weren't big holders before, and now all of a sudden they are large holders of MicroStrategy stock. And again, it's a de facto Bitcoin ETF. I'm not sure what else MicroStrategy does at this point, but I don't think there's anything they do that compares to the value they have in Bitcoin.
So with all these things going on, we also have the long anticipated Shapella upgrade, Ethereum's long anticipated Shapella upgrade. It's the combination of the Shanghai execution layer and the Capella. I can't. My language has gone today. The Capella consensus layer. Yeah, that's a tough one for anyone.
Right. It seems like they should have switched those. It would have made it easier to say.
Yeah, no kidding. So and to be honest, I feel like the price of Ethereum has kind of been a little bit in that no man's land of let's hang and see. And do you think this has had an impact on it?
Oh, this has definitely had an impact on it, because what's going to happen with this upgrade, the most significant thing really that's going to happen with this upgrade is those that have been staking ETH. Remember, this started back in November of 2020, way back then, when people staked ETH, when we started down this road of this proof of stake network. People had to stake 32 ETH, and this is before you had big staking pools or anything. People, at their home, if they had 32 ETH, they could create their own node and be staking Ethereum. Now, part of that was they weren't able to extract that. They were not able to take that ETH out of that node. They were not able to take it out of the staking pool at that point, up until the Ethereum community decided, when there wasn't a particular day at any point when they started the staking. They didn't say on this date, on April 12th, 2023, that's when you can unstake. They just said at some point when we feel like it's safe enough, we will allow for that. And that day is today. They decided, I think, several months ago, that day was going to be today. It's actually going to happen at about 6:27 p.m. Eastern time. So if you want to get that exact, that is when anyone who's been staking ETH for that period of time is going to be able to take it out, and they can do with it what they want. And so there's a lot of speculation on what's going to happen. Is it going to be like stock options or held stock being released that someone can go sell now? Is it going to be a whole bunch of people dumping ETH on the market because they go, my gosh, I've been holding this for so long, it's been illiquid, I haven't been able to realize any cash from it or anything, I'm going to go sell it. And that's part of the worry, is we're not quite sure what's going to happen with the price of ETH when this upgrade finally hits at 6:27 this evening. So that's one of the reasons. Look, ETH has moved up in the past few weeks, and for a while it was moving up at a faster rate than Bitcoin. The last few days, it's actually has not been moving up at that pace, and it's been in anticipation of this. Now, there's some negative anticipation of what if a whole bunch of people unstake and start dumping on the market. Then there's the positive that says, okay, most of the people that were staking are probably long-term holders of ETH. They probably like the fact that they've earned 4 to 5% more ETH. They're not likely the people that are going to go dump it on the market. So what we're likely going to see is people unstake and then possibly restake with another staking provider. The other positive aspect of this that some people have tried to spin, again, this is all making some sort of implications that may or may not be there, but maybe there's more institutional interest in owning ETH and staking it now, because there is no longer going to be that intense, unknown lockup period. Because if an institution starts staking ETH or allows clients to start staking ETH, then there's not going to be that you may have to hold this for 2 or 3 years before you can get it back again. There is going to be liquidity to it. They are going to be able to unstake at certain periods. So this might actually increase institutional adoption or institutional investment in ETH and in institutional investment in staking ETH.
That's actually very interesting. And I think there's a lot of people that were wondering, I've spoken to certainly a lot of people that weren't aware of, April the 14th being the key to April the 12th even, I don't even know days. being the key date. So it'll be interesting to see how it pans out, because as you did the reference to stock options that expire, that have the unlocking period. Quite often the rule is sell them and then figure out your stuff once you're cashed up, and then you reinvestigate your position. So it will be interesting to see. But I agree with you. I think the mentality behind the people who have staked generally have a longer term view and a stronger belief in the Ethereum network as a whole anyway. So
Right. And going back to adoption, Mehdi, remember, the people that are staking, part of the reason they're doing it is to earn some extra ETH, right? Earn more ETH by staking. But part of it is this is what keeps the network moving forward and keeps it safe. So if you contrast that to, a stock option lockup period or something, if I, have a lockup period on my Apple stock and I go sell it, I'm not negatively affecting the ability of Apple to continue to do business by doing that. In this case, if a whole bunch of people unstake their ETH, you potentially negatively affecting the network. And most of the people that have staked are in, they feel like it's in their interest and they want the Ethereum network to keep going. They like the idea that they're continuing to perpetuate it and keep it safe.
well, let's all eyes glued on
Yeah.
6:26 p.m. tonight. I'll certainly be watching. Let's have a look in the little regulation world. I know we don't have as many topics today, thankfully, or not so thankfully, I don't know. But just looking at the FedNow conversation and controversy, people have been bringing this up. Is this classified as a central bank digital currency, CBDC? Is this just an interbank conversation? Is this just the first step into digital assets? What do you think, Adam?
The Fed has obviously said emphatically, this is not a central bank digital currency. This is something that allows for instant payments, instant settlements between banks, essentially. And really what that means is either the Fed has been working on this for a really long time, and it's just a coincidence that it's being released now at the same time that they're trying to knock all of the crypto out of the country, or they saw that people are really interested in real-time settlement. People are interested in being able to transact on the weekends if they want to with their bank. And they, hurried to get this ready or hurried to get this out, because it seems like a lot of the talk is around, this is obviously what you wanted. We're going to give it to you. And, in my mind, of course, I'm a believer in crypto. In my mind, it's the Fed going, forget about that crypto thing. We're giving you the real-time settlement you want. So you should just be happy with that. And they're kind of taking away from the likes of Bitcoin and Ethereum this, instant real-time 24/7, 365 settlement. And they're, again, emphatically saying this is not a central bank digital currency. What it does mean is if I'm transacting with my bank, or my bank, meaning my bank is then transacting with another one over the weekend, all those payments are running through the Fed, right? So the conspiracy theorist in me says, I don't necessarily want all my payments running through that network. I don't necessarily want all my payments running through that system, because obviously there's a difference between that and a central bank digital currency, but it still gives the Fed the ultimate off button if they want it, right? Which is something that I'm just not horribly fond of, right? Giving the government the ultimate off button if they want it. I do like the idea of having a real-time payment system. I think there are a lot of people in this country that really need that. The number of people that are underserved, underbanked, that receive a paycheck on a Friday but can't get it deposited in their bank until Tuesday and have to go to payday lenders or something, or can't pay for things they need to on the weekend because of this silly no real-time payment system that so many other countries in the world have adopted, and for some reason we hadn't. And now maybe crypto was the impetus for the Fed to go, you know what, people really want this. As if our clamoring for it before didn't do it. It's now there is an option to do it. We're going to take that option until you, the Fed, give us what we want.
It does feel like a step in the right direction and real-time transaction. So, we'll see how this goes. Obviously, they're classifying it as an ACH wire system versus anything to do with digital assets in a more local kind of way. But
and you know what, Mehdi, it'll be interesting to see what this does for banks, right? Like it's tough to have a real bank run on the weekend when you can't actually get your money out of the bank on the weekend. Now, what happens when you can do whatever you want with your money 24/7, 365. You can have bank runs anytime you want.
It's going to be a very interesting one, actually. Good point.
Yes,
Uh,
I hope Janet Yellen has her phone right next to her bed and she's going to be answering those alerts all hours of the night.
she's a 9 to 5 gal. I think she just turns off her phone and electronics and puts some music on and a glass of Chardonnay and puts her feet up. So 5 o'clock, I'm out.
That's a great image. Thank you.
So yeah, we touched on it in our opening statement. Let's talk about some adoption that's been kind of getting pushed, and specifically today, it looks like Web3 seems to be in the hot topic right now, especially in Asia. Hong Kong's financial secretary has declared that it's now the right time for Web3 adoption. This is great. Again, more adoption.
Hong Kong, yeah, Hong Kong is saying we're ready. We're going to start funding it. They've got some some banks and some organizations that are going to start funding it. They're saying we're going to put in regulation that is good for the adoption of the industry. It's not necessarily them saying we are all for crypto trading, right? It is we are all for the adoption of this new technology and how it can benefit us, and therefore we're going to put in regulations. We're going to put in legislation that helps that adoption, and we're going to put some money behind it. And that's a big deal, of course, in the Asian world. You and I have talked about the focus financially on China and on Asia and Singapore and everything that's happening over there, and how we in the U.S. are going to have to compete with that. And this is Hong Kong and kind of by default China saying we're on board with this.
So that's Hong Kong, but what about cool Japan?
Japan's back, man, back from what, the 80s and 90s, when they were making cool robots and cars and everything. Japan is, you and I have talked about it, I think maybe a month or two ago, where they were getting together to write a paper, and we knew that included in this was going to be something about Web3 and DAOs and whatever else they might include. And lo and behold, it came out, and it's Japan saying, this is how we're going to get back from a tech perspective. This is how we're going to get back from a financial and economic perspective, is we're going to work at adopting some of this technology. We think it'll be better for us from a governance perspective. There's going to be something in there about setting up DAO structures, legal DAO structures in the country. There's going to be things in there about utilizing blockchain technology for their financials, for their money. They're going to have different, I think, tax ramifications that in the past maybe have been a negative towards crypto, and not just trading, but towards owning crypto as an asset. And now what they're probably saying is we're going to make it a more positive experience, more positive tax experience for owning crypto, managing crypto, having this being a part of your portfolio, or have businesses investing in it. So I believe there was something about auditing in there. Talking to the certified financial planners there in Japan and saying, and basically educating them, here's how you audit companies that are either crypto companies or are managing some of their treasury on chain, managing some of their treasury in wallets, and we're going to explain it to you. So it's both Hong Kong and Japan moving forward with the technology. And it seems like, Mehdi, as we said, it's more about adoption. It's not about a fad. It's not like they're just adopting NFTs because they want cute pictures of Hello Kitty or something like that. It is real adoption. And if we go all the way back to the beginning of our conversation, the A16Z crypto report, they talk about in one of their major points, the US is losing its lead. The US is losing its lead in developers not being here, in new companies not being here, and now it's going to lose its lead in countries that are not only promoting good regulation, but actually going forward beyond that and saying, we want companies to start adopting this. We want companies to start experimenting and utilizing this technology for the better. We think it can be the next version of the internet, and we're going to promote it. And that's another place that the US is going to be losing its lead, if we can bring it all the way back to that report.
Well, there's certainly an awful lot happening, and it feels like, unfortunately, Asia seems to be leading the charge versus even Europe, Africa, South America, actually everyone apart from the US.
Yeah.
It seems to be the consistent thing, unfortunately. So all I can do is urge our officials to get together in a room and figure out a plan of action that's not going to leave the US in the dust.
Yeah, I agree. And look, all these countries are doing this. The international trade, the international economy is more connected than ever. So we're not going to have a choice but to try to keep up. Or we can make ourselves an economic island if we want to. But there's not going to be a choice except to adopt and try to keep up once the rest of the world starts utilizing the technology.
Well, let's not become an economic island. Adam, as always, thank you so much for sharing your thoughts and on everything crypto. And we look forward to continuing our crypto revolution conversations as always next week.
All right. Thanks, Mehdi. Have a great rest of your week.
You as well. And I want to urge our viewers, don't forget to check out Adam's course on digital assets and crypto education. The website's down there, interaxis.io. And don't forget to sign up to yourfinance.tv. Make sure you subscribe and like. And until next time, good luck investing.